Do you yearn for travel that involves outdoor adventure and learning? I do. I also have a passion for all things farming and agriculture. I've traveled to exotic jungles to learn about growing chocolate. I even once owned my own organic vegetable and sunflower farm. And now I'm planning my journey back to agriculture. Agritourism, defined as travel that involves some type of agricultural experience. Agritourism is all about entertaining. But the marketing strategist in me knows that at its core, agritourism is really about educating, and education affects change. My future farm needs to deliver a profound experience to all of its visitors. It needs to educate people about food, health, and climate. Join me to learn from experienced agritourism farmers and entrepreneurs and help me build my future farm strategy. And who knows, maybe one day soon you'll find yourself in a tropical jungle cutting open cacao pods with a machete, or savoring an outdoor plant-to-plate community dinner with 100 guests at a farm in Illinois. So let's tap into the agritourist in you. It's not every day we see an agriculture professional turned banker. Well, today we will meet one. Many of us bank at some of the large banking institutions with branding we are very familiar with. If not one of the large banks, others bank with credit unions or invest in local and regional banks. But do you think about how your money is used and invested after it is deposited into your current bank? In all honesty, I didn't, until I learned about Walden Mutual Bank and had a conversation with the CEO, Charley Cummings, agriculture business owner turned banking professional. If you care about agriculture, farming, healthy food, sustainability, and our earth, then why wouldn't you consider investing your money in a banking institution that cares about the same things, where your deposits are invested back into agriculture, farming, food, sustainability, and our earth? And if you are a growing company in any of these industries and are located in New England and New York, Walden Mutual Bank has financial options for you to consider. This is your Agritourist podcast host, Jen Ross. Enjoy my conversation with Charley Cummings from Walden Mutual Bank. And even if you don't move your money right away, research how your bank is investing its funds and whether it is in alignment with how you would want your money to be invested.
Hey, Charley.
How's it going?
Oh, good. How are you?
I'm good.
So we finally get to speak. It's nice to meet you.
Likewise.
So I wanted to just start with, I do want to talk about your background. I've listened to a bunch of podcasts that you've done and read a lot about, and obviously been following the bank for a bit. Before it actually launched, I saw it on Instagram and I was really curious about it. Just in general, like when you're looking at business and, you know, the different businesses that you're interacting with, what are some of the trends you're seeing? I just want to talk about a generic business question. Just some of the trends and business challenges you're seeing in the target market you're focused in. What are you seeing out there? What's happening with people's businesses? What are some of the biggest challenges that they're facing right now?
Do you mean just in general or in today's context, or is there anything?
In general, but obviously today's context is changing pretty rapidly soon. So however you want to answer it.
I guess I would start by saying there continues to be this sort of missing middle, so to speak, from a financing perspective, where there's a lot of need for financing for local food and farm based businesses, especially those that are starting up, and they might not be eligible for debt yet. Like they might not be something we're able to do from a lending perspective, but they're also not really investable businesses from an equity perspective, because the owner never intends to sell the business, for starters, and two, they're trying to grow the business to provide a salary for themselves and their family, not to grow the equity to, some astronomical number to try to sell it. So that's just a very different type of business than the one you often read about in the news that's out raising, institutional investment dollars. And those are still very hard to fund. And despite designing the bank around funding food and agriculture businesses across the entirety of the value chain, that's still a hard to meet need at the really early stages of things. So that's one thing. I think another is there's always this challenge of that's often articulated from the funding side of the equation as a chicken or the egg thing between supply and demand. And so, for example, if you're trying to create a more functional grain ecosystem here in the Northeast, the growers will say, well, there's nowhere to process the grain. And someone thinking about making an investment in a processor would say, well, we can't build a processor until there's enough grain to process. And so oftentimes nothing happens. Sometimes investors will have, and very well-meaning, impact-oriented investors will have the perspective of, well, if we build it, they will come type of thing. And it seems like we just have to solve this problem by building the processing plant. And then lo and behold, the processing plant isn't full because no one is demanding the grain that would come from it, even if they can convince people to grow it. And so the whole thing sort of feels like pushing a rock up a hill and it keeps rolling back down. And that can be a hard challenge to solve. I'm a big believer with that particular example is like it all has to start from the demand side. And that's why we've made a lot of loans to brands that create demand for local products and high integrity, sustainable products. And that's what sort of like creates the spark in the market and then makes it clear someone has to build a processing plant. And then that infrastructure creates demand from the growing side. So from my perspective, it's not chicken or the egg. It always has to start with the demand side. But also from the bank's perspective on that same challenge, it's like we've tried to grow the entire ecosystem at once. So within grain specifically, I'm really excited by the fact that we've actually made loans across the entire ecosystem. So we've made loans to growers, a malt house up in Maine, a couple different flour mills, a couple different flour brands, retail, wholesale bakeries, a couple different independent breweries, as well as a cracker brand that recycles spent grains from area breweries into these really amazing crackers. So we've really got the whole end-to-end system there, and being able to support the entirety of all at once hopefully also sort of breaks through that chicken or the egg thing, if you will.
Okay, excellent. So tell me a little bit about your backstory. I know you were born in Cape Cod. Oh, no, wait, you were born out west, weren't you? Or Midwest.
Yes. Wow, you have listened to some podcasts.
I have. I have my notes.
I love it. So I was born in Cedar Rapids, Iowa. There are more pigs than people in the state of Iowa, fun fact. But wasn't involved in agriculture and wasn't really exposed to it at that point, besides just driving by a lot of cornfields. My parents divorced when I was pretty young. My mother, my three sisters, and I drove from Iowa to Cape Cod, and so I grew up since I was 7 or 8 or so on Cape Cod, which is where my grandparents lived. And then I guess fast forwarding a few years, I started my career in management consulting, which was a great way to get a broad perspective on a lot of different businesses. And I worked with some really awesome people, and some really interesting challenges, but I just wasn't all that fired up about, at the end of the week, sort of, increasing this cable company's market share by a few points. It's just hard to get really excited about that. And yet I'd had a bunch of different, and one in particular, experiences on the nonprofit side that were very much the opposite, where I was really excited about what we were trying to achieve, but the day-to-day of trying to get there was not exciting. And it was always a grind, and we never really had the right resources to do what we needed to do and such. So that drove me into this area of, I guess you could call it broadly social enterprise and impact investment, and sort of people using for-profit businesses to do interesting things from a social and environmental impact perspective.
Okay.
And that's where I've been ever since. So I spent some time with a composting company, a venture-backed composting company, mostly based in California's Central Valley, which is the agricultural headquarters of the entire world.
That must have been interesting.
It was the most productive place on the entire planet. Agriculturally, that one little valley produces incredible amounts of food, 80% of the world's almond and 40-50% of pretty much every other cash crop you can name. And yet there's nothing to eat there except for Arby's and McDonald's. So it's like this funny, not so funny dichotomy where the people producing this food literally are not like enjoying the fruits of their labor. So that really stuck with me.
So then what came out of that? Because you came back here, you came back to the East Coast.
I did.
And eventually had your own farming related business.
Yes. My wife and I read a few books together. This was long before we had kids, so we still had time to do things like that.
Audiobooks are good. Now go out for a quick walk, even with the stroller.
Through much without falling asleep. So we had read, of course, Omnivore's Dilemma around that time, but also Kristen Kimball's book called The Dirty Life, which is half romance novel, half farming biopic, if you will. And she's just a brilliant writer. And so it's really fun to read, but it does romanticize small scale farming a little bit. I think she has a follow-up book that is maybe more.
Is she the one who lives in New York?
Yes. Yep.
Upstate New York? Yes, I did read that book.
Great book. So my wife was really taken by that and said, well, I think I'm going to take this summer once we get back to the East Coast and, find a vegetable farm to work on and just do that for a little bit, because she had been in the Boston Ballet previously. And so really missed that physical aspect to her work. And, we had both worked in the Bay Area at desk jobs. And so she was ready to get on her feet again. And she just loved it. And summer became a year and then 2 years. And so I got to know a lot of people in New England farming just by virtue of some of her relationships. And that's where my first company was really born from. It's called Walden Local. It's a brand of pasture-based meat in the Northeast. So grass-fed beef, pasture-raised pork, chicken, lamb, etc.
And you actually had come to an interesting conclusion about why you selected that versus vegetable farming or any other type of farming. Do you want to talk about that a bit? Because I know you had alluded to, you did research on, what could be profitable and what made sense in that New England area that you were in.
Yes. Well, this is a hard part of the world to grow much of anything. And we have, anyone with a home garden knows this, but we tend to have hilly, rocky, sandy soils, and a relatively short growing season and very heavy annual rainfall. I always say that the city of Boston gets more annual rainfall than Seattle, which people find surprising.
It is.
They have more rainy days. It just not the quantity of water is not as much. And so this is a tough part of the world to grow monoculture row crops like corn and soy. However, it is actually one of the best places in the country, and even in the world in some ways, to grow perennial pasture. That is, grasses you don't replant every year. It's common in the Northeast to get 3, 4, sometimes 5 cuttings of hay. And in most other parts of the country, like if you go to the Pacific Northwest, it's like pretty standard to get 1 or 2 in a season. So what you can produce from a few acres here in New England is just quite different in that regard. And so that makes it a really amazing place to grow ruminant animals, the animals that eat grass, in particular sheep and cows, which is sort of the pastoral history of agriculture in New England. So at the bank, we are always using that phrase of like, what's old is new again. And that's true here too, is the folks that are doing interesting things in ag in New England are in many ways going back to methods and approaches that are 100 years old.
So when did you start that business?
We did a pilot program with 50 of the first families that were sort of in this share program in November, December of 23, and then sort of opened more broadly in 24. Excuse me. Did I say 23? 2013.
I was like, wait.
Yeah, 2013. 2013 and then 2014 opened to the public.
And is this your farm, or is this many farms that you're utilizing to support your customers?
Oh, many farms, like 100 farms now across New York and New England.
Wow. Okay.
My wife and I have sheep now, but at the time didn't. She was working on a different farm.
Wow. Okay. So you've created almost like a co-op and then you're delivering the meat.
In effect, yeah, because we would exclusively buy whole animals from area farms and then distribute them in this sort of share program. Yeah.
Okay.
So now the company has vertically integrated backwards, so to speak, own and operate a slaughtering processing plant in Vermont, a sort of pick-pack cold storage facility outside of Boston, and then we still do all of our own last mile delivery to individual homes from central Jersey all the way up to Portland, Maine.
Wow. Okay. Excellent. That's great. And everything's going well with that business?
Yeah. So I stepped off the board in 22 to really focus in on the bank. That was around the time we got the charter across the finish line. But yeah, still in touch with a new CEO and really good team over there.
Great. So I want to talk about the type of bank because that I know you've covered in a lot of podcasts, and I think it's really important for people to understand that, because there's so many names of types of banks out there, and I don't think people understand the differences. But where did this come from? You're in a certain industry, and then all of a sudden, why a bank? Like, what was the need that you saw was happening that you thought, I can do something to make a difference here?
So we've forgotten this because a lot of people think about their bank deposits are literally just put into a safe, but they're not. There's two sides of the bank balance sheet. There's loans and deposits. So banks take deposits and they lend them out to somewhere. And so to answer your question, it was both sides that became quite clear. There's an opportunity to sort of do something that could be really impactful. On the loan side, it was that at Walden Local, we were increasingly being asked to finance the entirety of that supply chain, often in the form of, prepayments on our own buying commitments to farms. And there are a number of reasons why there's seemingly an infrastructure gap there in the existing lending options for folks. But I think there is for farms and also for businesses like Walden Local. We had a hard time finding the right banking relationship that really understood the nature of the business and would support us for the long term. So the idea of a lender that was really immersed in that ecosystem, I think, was a real need and a place where a new bank could be really impactful, not just from a lending perspective, but from a overall ecosystem perspective. We can connect folks with customers and vendors and advisors or investors, and just by really being deeply immersed in those relationships and specialized in this particular area, can add a lot of value to that relationship, to that lending relationship.
When you were thinking about this, did you see any models out there that may not be in the same industry, but were doing something similar?
Sure. I think a lot of people in other industries would tell you that verticalization, if that's a word, is a thing in the modern era where increased specialization can drive a ton of value. And so this is maybe in that same vein. And that's a what's old is new again type of thing too. It's in some ways a response to continued consolidation in banking in particular, but in other industries, that's the case too. Because when you consolidate to some extent, like you become a generalist and lose those specializations.
Yep.
So the other thing on the lending side of the equation was, well, we could have done this as an equity fund or a debt fund or a nonprofit or some other structure. And there were a few things interesting about doing it as a bank. One is that a bank, by virtue of having a banking charter, has the lowest possible cost of capital, lower than the US government itself, because the government doesn't take deposits. So the government has a low cost of borrowing, but they don't have the benefit of federally insured deposits. So that gives a bank a tremendous cost advantage that allows a bank to be really impactful in particular places. So if our idea is creating a more sustainable, vibrant, and inclusive local food ecosystem, a bank that could lower the overall cost of capital for that entire ecosystem at a scale that would be hard to achieve through those other types of vehicles could be really, really powerful. And so just recognizing that banks are a pretty interesting lever for change in that regard was a big part of that.
Okay.
Which is a good segue to the deposit side of the balance sheet. And that's just the realization that increasingly there is a huge segment of the population that wants to align with a set of brands that represent their values and are achieving a particular set of impacts that they want to see in the world. And that's true in a lot of consumer categories, but in particular, like stuff we wear on our bodies, clothing and stuff we put into our bodies, like food. And so banks are a little further afield, and they're this sort of out of sight, out of mind thing. But it's in fact one of the most profound and impactful decisions you make as a consumer is where to put your deposit dollars, because again, they're going out another door and they're being used in a particular way. And so coming to understand that the three largest deposit taking institutions in this country are also the three largest funders of fossil fuel development in the world, that sort of came as a surprise. And some people hear that and they're like, oh man, it's like one more thing I got to worry about, like fixing. But other people are kind of intrigued by the idea of like, well, I've thought about my investment portfolio for a long time in that way of like, what are my dollars being contributing to something positive or something negative? And your deposit dollars are the same thing. You know, that's your money that is being used in one way or another. And you know, we're not the only bank telling this story. I think we're doing it in a particular way. Again, it focused specifically in the ecosystem I'm talking about. But the difference between what happens to your dollars in a small community bank versus a large one are pretty stark. So we're very happy to contribute to the renaissance, if you will, of community banks and mutual banks in particular.
Explain the mutual bank piece.
Well, I'm glad you asked. A mutual bank is this sort of legacy New England construct in which the ultimate owners of the bank are its depositors. It is very much akin to a credit union, except it's a bank, and so has a little bit more flexibility around what it can do. And the reason this cooperative type of structure was important to me and our continues to be important to our team here is that it's intended to be permanent. And people who have spent time in banking or you know, had their entire careers in banking have often been through 2, 3, 4 mergers where their bank gets bought by another bank. There you go.
I worked for JP Morgan Chase for 14 years, 15 years. And it started out as Chase Manhattan, and we merged with Chemical, and then we merged with Manufacturers Hanover, and then a bunch of others. And now it's JP Morgan Chase.
So you've been through more than 3 or 4.
I've been through many mergers because I was actually at the what they called the Heritage Chase Manhattan Bank.
Okay, well, you should have disclosed that at the beginning of this conversation.
I don't work there anymore.
I'd be
many
more
years
mindful
ago.
about insulting your former employer.
No. Many years ago. That's my first part of my life.
Got it. So yes, as you can attest, a lot of people who have been in the industry for a while have shared that experience. And you know, the banking system as a whole has gone through this continued consolidation over many decades now. And that has pretty consequential implications for the communities that small banks serve, because small banks are the ones that lend to small businesses and small farms. And so the mutual model, by contrast, is explicitly saying we didn't set up the bank to sell it. And in fact, nobody, including me, has an incentive to sell it. We're incentivized to build an institution for the long term. And there are so many cautionary tales out there of impact-driven companies. So these were really started as social enterprises that are bought by a larger company, and then pretty soon their impact model is sort of a shadow of what it once was. And I don't mean to sometimes those transactions are good for and necessary for all involved. I don't mean to suggest that that activity is bad. It's necessary and important. I just mean to say, I wish I had an example of the opposite, where through an ownership transition like that, a company was able to intensify its commitment to mission and the non-financial impact that it intended to have on the world. And I don't know of any examples of that. But I know a lot of examples of organizations that have remained independent for a serious amount of time. And the mutual banks that are still around in this country, and there's a few hundred, I mean, these have 100 and 200-year histories of serving particular communities and really being oriented around benefiting those communities and not enriching shareholders. So it's just a very distinct model. And in sort of putting together the initial structure of this, to me, it was just really exciting and interesting to think about building a 100-year institution and marrying that impact model with a governance structure to match. Because again, we all know that there's something inherently unstable like about the family business that transitions from one generation to the next, and how many make it from the second generation to the third, or the third to the fourth, and how many again, private companies that started with these amazing missions and have raised outside capital, so at some point have to transition those owners. Oftentimes that is through an M&A transaction of some kind, and the original intent becomes quite muddled relative to what it once was. And so again, like the alternative of really building an institution for the long term, I think was really, really meaningful and has been pretty fulfilling for this initial crew here.
So you have an office in New Hampshire. I know it's not like a walk-in bank type of office. So if I wanted to move my money into this bank, what do I do? What does a customer do? What are my options?
Have you not already?
No, I have not already, because I was waiting for this conversation.
Okay, well, if that is the only outcome of this call, I'll be happy about that.
Oh, I am very interested. Trust me.
So yes, you can.
And I'm interested in spreading the word as well, because I think what you're doing is pretty cool. So.
I appreciate that. So we're a very digitally oriented institution, I guess entirely so. So you can open an account on your phone, you can fund the account with your phone, you can deposit a check with your phone, you can make any sort of transfer with your phone, you can, as of last week, put a stop payment on a check with your phone. So you should be able to do everything you need to do through the app. You're, of course, welcome to visit us here, but it will mostly be a teach a person to fish type of situation. We don't have any cash here. So there's wonderful people, and there's a little exhibit out front of the types of businesses we've lent to, but it's not really a bank branch per se. So yes, I don't know if that answered your question, but you should be able to do everything you need to do either on our website or through your phone.
And then, okay, so then tell me about some of the businesses that, or what types of businesses are you targeting from a lending perspective? Because it's not obviously the startup per se. These are more established businesses. Like, just give me just a high level target on who should be looking at this as an option.
So everyone is the answer to that question, because we make we offer both individual and business deposit accounts. So if you're an individual that wants your deposit dollars to contribute to something positive and lasting in the food system here in the Northeast and elsewhere, would love to have you as a partner, so to speak. And same thing on the business deposit side. It's an online account that has a pretty good interface with, you can have multiple admins on the account and link with QuickBooks and other accounting services and that kind of thing. Would welcome any business to do that. And then on the lending side, we're typically lending between $50,000 and up to $3 million at a time. And that would be everything from shorter term working capital lines for purchasing inventory, or financing receivables, or that kind of short-term revolving type need, to sort of medium-term stuff for purchasing equipment or vehicles, to longer-term notes, like mortgages on farmland or commercial real estate, that broadly support businesses across the entire food value chain. So everything from production farms to manufacturers, distributors, retailers, wholesalers, all of that. We have a bunch of direct-to-consumer businesses, because obviously I have that experience from Walden Local, so understand those businesses really well and can maybe support them when another bank couldn't. And then increasingly too, other things that are maybe tangential to the food system, but you would consider, or we consider, to be a part of that. I keep using the word ecosystem, perhaps too much so, but that's the way we think about this. But part of that ecosystem, including stuff that is sort of more broadly touching natural resources in important ways, like waste and energy, timber, et cetera. Yes, we're typically lending to more established businesses. We have particular loan programs for really small businesses that are sort of looking for less than $150,000 loans at a time. And in some cases, those businesses are not yet profitable. But our sort of core lending target is more typically businesses that are, $1 million to $20 million in revenue, and are profitable or have a really strong line of sight towards profitability, and looking for a banking partner that is sort of immersed in this value chain.
Yeah. So you was 2023 your first full year open?
Yes. Yeah. Well, not quite actually. We opened in February of last year. So
okay.
Almost.
Okay. So then 2024 is your first. So I guess what are some of the learnings, challenges? What are some of the surprises from this experience thus far?
I think we have this really awesome mix of people from inside and outside of the banking industry, which, I'm coming from the outside in, and so I maybe didn't recognize this until being in it, but banking is a really insular industry, and technology change tends to happen slowly, and cultural change tends to happen slowly. And the philosophical underpinnings of a bank explain why that is the case. And maybe it is as simple as, for the most part, there is no upside in a bank. Like, think of the bank as, it's like the inventory manager job in a warehouse, where you're not getting a gold star if you have the perfect amount of inventory, but you might get fired if you have too much, and you definitely get fired if you have too little. So compare that to a bank regulatory exam. There really is no gold star. At the end, like, the best case scenario is you have a few immaterial recommendations. But the worst case scenario is you are shut down. Like your doors are closed. And the same is true of a bank loan, right? Like if this company becomes the next, multi-billion-dollar unicorn, that's great. And maybe you get some notoriety out of that, but you're probably just getting the same interest rate clip that you were before, maybe less because the company is bigger now. And however, if that company doesn't become a unicorn and actually, goes under, the bank is holding the bag.
Yeah.
And so that basic reality of what a bank is, and as it should be, because like you're not playing with investor dollars. These are deposits. And you do not want to lose deposits. And so there's a reason why that risk orientation is what it is. But that doesn't mean that the bank's culture and, human capital orientation needs to be 20 years old. So we've tried to be a lot more innovative and forward thinking on both culture and technology. And it helps to have a clean sheet of paper. We don't have any legacy technology systems that are like a big risk to shift off of because we've been using them for 40 years or whatever. But anyway, that's definitely been an interesting lesson learned, because when we're at our best, there's a really strong push-pull between people who grew up in the industry and people who are coming from outside the industry. And I think that mix has served us really well in doing interesting stuff and hopefully, breaking some of the unwritten rules while making sure we're still following all the written rules.
And has your growth been what you anticipated?
Yeah. I'm happy to say we're very much sort of doing what we said we would do, hoping to turn our first profit here before our 2-year anniversary. So that'll be a really nice milestone. And our assets are, very much in line with expectations. So far, so good.
Excellent. And personally for you, have you really coming from where you came from, like owning your own business to now, being the head of this, how are you feeling about all this? It's it's a similar role, but a very different role.
It is very different. I mean, I think the most distinct difference is when I started Walden Local, I guess there's just like totally different phase of my life. Didn't have kids yet. I think we had just gotten married at that. I should know that. We had just gotten married at this point.
We'll edit that out.
Yeah. And so was willing to, get in a truck and do that like multiple days a week. And that was very much, continues to be, but particularly at that stage was just sort of a grinded out type of business that, there were definitely some really interesting sort of operational innovations and process improvements along the way. But at the beginning, it was like, I'm just buying this van that I justified at the time as like, yeah, I have some friends that have really nice, expensive cars. This is an expensive car. It's just slightly less socially acceptable than, a BMW sedan. And so the physical nature of the early days of that, and just sort of being the one that, if a freezer or alarm went off on a Saturday at 2 a.m., which it tended to do. It was going to be me going in and checking it out. And it took us a long time, took me a long time to develop like a real leadership team there as the company grew. And the bank in so many ways is the polar opposite. So we had an established and really well experienced leadership team before we even had a business. And there's no physical product here. So there's no freezer alarm or physical labor. And I'm also have 3 kids under 7. So that presents some demands on my time. So I think maybe requires a very different style of leadership, if you will. So I don't know. I'm still maybe figuring that out.
Yeah, I'm sure it's going to take time. Yeah, it is very different. Do you feel like you're having the impact that you want to have?
Definitely. I mean, where we started, I shared with you the sort of grain practice as a good example of like, that's exactly what we set out to do, is be able to support the entire, I keep hesitating to say ecosystem because I think I've said it about 100 times. But yeah, it's, supporting each and every piece, and that I think feels really good, and hopefully we've built some really impactful partnerships in that way. So that one stands out to me. And then there's a bunch of farm relationships too, where I think we've had really significant impact with those dollars. So that's been exciting to see.
Excellent. Well, I think that's the most important check-in is, am I having the impact I want to have? I commend you for all that. And I commend you for being in the banking world.
Thank you.
Not an easy place to be.
I appreciate it. Well, it's actually, honestly, it's helpful to be in this seat and not really be a banker, because I can sit at the same side of the table as an operator, knowing what it's like to
absolutely
try to take the phone calls from a customer or whatever while you're also driving the truck and going home at night and trying to put together the pieces of payroll and do the accounting and stuff. It's a real grind. So to be able to sort of speak fluently about that with an operator goes a long way. So I'll always sort of be a pretend banker in that way.
It's a good place to be.
Yeah.
Thank you for taking the time for this. I've been wanting to talk to someone because I was so interested. It was weird. I saw that Instagram post before you launched and I'm like, oh my God, this is brilliant. And I just followed you. And then all of a sudden I saw you guys launch and I'm like, oh, I have to talk to them. But no, definitely, I think it's a great thing you're doing. So
well,
thank
sincerely
you.
appreciate it. And thanks for having me. I had fun chatting with you, and please do go open an account and send me an email. Let me know how it goes.
I will.
Okay.
Take care, Charlie.
You too. All right.
Bye-bye.
Thanks, Jack.
I hope our AgriTourist podcast prompts you to think more about where your food comes from, whether it be your vegetables, fruits, meats, and even those sweet treats. Don't forget to subscribe and share this podcast with someone you think may truly benefit from or be inspired by it. Visit us at agra-tourist.com. Until next time. As we are learning from many of our farmers and entrepreneurs, strong connections help propel our visions. Through my interview with Lisa Chase from the University of Vermont Extension and Vermont Tourism Research Center, I was connected to an exciting and new organization called the Global Agritourism Network, or GAN for short. The global network is made up of agritourism stakeholders from around the world. They include farmers and ranchers, researchers, educators, community planners, policymakers, agricultural service providers, and tour operators, among others. It is currently free to join, so if you have any interest in agritourism, check them out at agritourism.eurac.edu/GAN, or just Google Global Agritourism Network. The link will be in our show notes as well. You never know, this global network may help you take your agritourism vision to the next level.